Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast, Sunday the 28th of February. I'm Phil Carroll.
I'm Kevin Hornsby. Is that 2 months of the year gone already?
Is it a leap year? We got a 29th this year. No, we haven't, have we?
No.
It's not a leap year, but good week, Kev. Anything going on in your life that you want to tell us about? That's not me probing for something, by the way. That's just genuine question.
Not really. I've just been working, to be honest. Work. So it's cold here. We had a low of 6 degrees last night. I mean, that is Baltic.
It's warm here. It's about 14, 15, but it's still got that rain in the air. I've had a mental week sorting out. I don't know if you've seen it online, but I've bought this Project Lotus, and I have the most mundane job of removing a 15-year-old paint protective film that was stuck on in 2010. And it is like removing this glue on each panel. It takes 4 hours to do one panel on the car, and it is the most laborious task I've ever done. But actually, in a way, it's kind of quite therapeutic. I suppose it's a bit like painting and things like that. Once you get yourself into this zone, nothing else matters. You're just focused on this job.
You get the headphones on and listen to a few things.
That's actually not a bad shout. I didn't think I had the radio on at the time, but definitely didn't have any podcast. But that's a really good shout.
Not a bad way to spend the day. How much did you spend on this Lotus thing?
I don't want to disclose the amount because it's kind of like it's going out on socials and everything like that, but it wasn't a lot of money. Let's just say it was half the price of what the market value of it would be if it was completed. And it's probably going to cost a couple of thousand to get everything, maybe 3,000. I bought some new tires for it. I've had to do an oil change, but obviously the big one is the paintwork. But the idea is I'm going to strip it all back and then do a really bright wrap. Like I've got to choose a color. It'll either be a bright red or a purple or something funky. And then use it as a track car or something like that, or as a project, really.
Very good. That sounds interesting.
So
I've seen you start doing it on social media as well, so you can see how it goes. You're going to become that guy, Matt Armstrong guy?
Armstrong from Temu, I think, is the answer to that one. But so let's have a look at some of the news stories that have dominated the headlines this week. I mean, there really is only one, Kev, isn't there? In a dramatic escalation of Middle East tensions, the United States and Israel have carried out a coordinated military campaign against Iran, including strikes on Tehran that reportedly killed Supreme Leader Ayatollah Ali Khamenei and other senior officials, a move confirmed by Iranian state media after initial reports from US and Israeli leaders. In response, Iran has launched a wide wave of missile and drone attacks across the Gulf and toward Israeli and US military targets, with explosions heard in Dubai, Bahrain, Qatar and other Gulf cities, and drones hitting infrastructure such as Bahrain International Airport, Dubai International Airport, prompting heightened regional alarms and disrupted travel. The conflict continues to unfold rapidly, raising fears of broader regional confrontation as Iran continues retaliatory operations following the US-Israeli offensive. Now, obviously, we talked with Charles last week, and he said that this has got a real risk of actually happening. We're not totally surprised. There's been a lot of build-up of military presence in the Gulf there. What do you make of this, Kevin? Obviously, someone who's living in Egypt, we've seen attacks on what we'd call US interests there in Bahrain, US military sites. But how do you feel about these drones landing in places like Dubai and Bahrain, which are usually pretty safe, jurisdictions?
Yeah, I mean, it's just retaliation, obviously, because where else do they go, sort of thing, is the question. It's the Iranians are now in a situation where I think they've lost. The regime is going to be in tatters, and I think that it's just the flailings of a defeated organization or situation, and hence the reason. How can they cause the most trouble and the most notice to the world is to attack the other Gulf nations who were basically staying quiet and not involved.
Yeah,
so it is really. I don't see it escalating greatly. I think the Americans and the Israelis are going to surgically take out their ability to do these things over the next while. And
I guess the question I've got is where does it leave Iran? Obviously, they've probably got a successor already lined up. They said that Khamenei was already making succession plans. Do we think, I mean, we've seen a lot of social media, again, we can't verify this, but there's been whooping and chanting, a lot of celebrations in Tehran that we've seen thus far. Does it run the risk of an Iraq situation where, you depose someone like Saddam Hussein, you leave a vacuum and it creates, more terrorism in there? Or do we think that there'll be a succession? And the problem is, it doesn't feel like Trump has a plan here. What's he done? He's removed him. Is he expecting there to be a coup or an overthrow?
Yeah, it's hard to say, isn't it? And they don't know either. That's maybe more of a risk than what's actually happened to this point. For sure, the Israelis themselves want a weak Iran, just like they wanted a weak Iraq, and they're going to get that. I think the one thing for sure is all the other nations, the Saudi Arabians, the Kuwaitis, the Qataris, even the UAE, they want peace in this region. They're trying to develop their economies in a different way than just oil. So they want peace. So yeah. I think it's more probable that this is going to create more peace than problems. I suppose the thing that we cannot wonder is effectively Iran was and is connected heavily to Russia.
Yes.
And then you've got your Russian-China issue then as well. So will they just stand by and do nothing? I think it's likely that they will in this particular situation, but it's not an easy situation, obviously.
Not at all. And as you just mentioned, just touching back on the oil market there, that potentially an oil market shock there, because the Strait of Hormuz is critical to global oil flows. And we know that they've said that they're going to close that off. So any threat there could spike oil prices sharply and disrupt the shipping. Will that cause countries who are dependent on the Strait of Hormuz to then, reach out to Russia, for instance? I know a lot of China's supply comes through that Strait of Hormuz. So will they then go to Russia for oil? Will this actually benefit the Russians? Probably is the answer.
I don't know. I think it's more likely that the biggest country to lose out financially from all of this would be Saudi Arabia if they put 80 to 90% of their oil through the Strait of Hormuz, and most of that oil goes to Russia and China.
Yeah.
So you ask yourself, do Russia and China want to pay $40, $50 more for their oil? Doubt
sure.
it.
Yeah, I get that. And I guess the next question I've got is, I mean, without, trying to benefit from this or in any way, the market reaction, obviously, potentially we would say gold oil prices may have a little bit of a rise on Monday opening. But what do you think about the wider market? I mean, there's been a lot of memes online of people saying my portfolio Monday morning, showing the Grim Reaper. Do we think the markets are going to jitter for this, or do you think they're going to benefit from this?
I think we'll have a bit of a jitter, but I think you're going to see oil stocks go bananas, I think, next week, because they're probably undervalued as it is anyway. And I think they're going to go up. And I think resources in general are going to go up. Gold, silver, copper, all of those things fully expect that they will increase in value. And that I don't think is necessarily a complete consequence of what's happening. It's just a reality that those things are going to become more and more important, more and more valuable over the time. But I suppose my final comment would be, I just hope that not too many lives are destroyed, literally by death in this whole situation.
Yeah.
Let's hope it can be clinical and that there is a change which will be better for the Iranian people. I mean, it's quite obvious when you speak to any Iranians that are outside of Iran, that the majority of the people in Iran do want change. It's been a brutal regime, and let's see what happens.
Okay. Well, we've got an action-packed show this week, so let's move on to our first guest. Today we're joined by key figures from Hamak Strategy as the company continues to strengthen its leadership and sharpen its gold and digital asset strategy. We're delighted to welcome Carl Smithson, CEO, Mike Murphy, Executive Director and Chief Strategy Officer, alongside Stephen Poulton, Gold Strategy Advisor, and Tim Franks, Treasury Strategy Advisor. Hamak has been building a unique platform combining gold exploration in West Africa with a balanced treasury strategy focused on both Bitcoin and physical gold. And this expanded leadership team reflects that ambition. Carl, Mike, Stephen, Tim, great to have you all with us.
Morning.
It's a full house today, guys.
It is, isn't it? Yeah, gosh, that was an introduction. So, Mike, let me start with you. With these new appointments and a clearer strategic focus, how do you see Hamak positioning itself for its next phase of growth?
Really well. I mean, Carl and Steve are working together, obviously, on the gold strategy. And already we've got some things in place there that obviously Steve and Carl can talk to you about. And Tim and I are in constant communication as well over our treasury strategy. As you know, we've got some Bitcoin on the balance sheet at the moment, and we're looking at other ways of, enhancing the value of that. So I'll leave it to the two guys to explain to you what their thoughts are.
Very good. And also, Steve, from a gold perspective, obviously gold is very, very hot topic at the moment. What excites you most about the company's portfolio and the opportunities in West Africa right now?
Thanks, Phil. It's a great question. There are quite a few ways of answering that. I think the key differentiator for Hamak is that it has opportunity to get into very early stage gold projects that have high potential. So rather than getting a producing asset, Hamak is focusing on excellent geology with targets that can become very large mines and has the technical expertise to take those to the next phase of development. I've operated in Liberia for quite some years, going back like 20 years or so, and I know the terrain that Carl is operating in, and it is very prospective for large gold discoveries. In fact, one of the first projects I worked on in the late 90s is now producing over 100,000 ounces a year from Liberia.
Yeah, brilliant. And Tim, on the treasury side, how are you thinking about balancing digital assets and physical gold to create long-term shareholder value in what's been a volatile market?
Yes, look, Bitcoin's always had a history of being a pretty volatile asset, but I actually think that over time that volatility will actually drop. What you're seeing in the market is a lot more holders are actually holding onto Bitcoin, which means that a lot less Bitcoin are actually traded day to day. It's actually very similar to what's going on in the equity market with all the passive holders. So I think that volatility can work both ways. We've obviously seen it on the downside come down a fair bit, and there's some profit taking going on, some unwinding of the carry trade, various other positions. But I think that what you could see is, as we get a move up, you get a very quick squeeze. And if we want to look ahead and Hamak's a longer forward-looking company. We come to April 2028, and there'll be what's called the halving in Bitcoin, which means each block mined will mean that you only get half as much for each block. So it means that at the moment we're looking at 164,000 approximately Bitcoin to be mined each year. That'll cut in half. So that supply in the market, offset by institutional demand, can create quite an explosive situation, I think. So it's getting a balance between the two products, between the Bitcoin and gold. And the last thing I'd add is that, the idea is that, we'll obviously keep accumulating Bitcoin opportunistically as and when we can, but it's also, in a managed way, trying to maximize the amount of Bitcoin we can get per share. So we've got some various strategies that we're looking at in order to kind of increase the yield per se on that Bitcoin. So it's not just sitting there, letting it sort of, letting it not rot, but letting it sit in our wallet. We want to actually make it a productive asset, just the same as and Steve and Carl are doing on the gold side.
Very good. So Steve, Carl, tell us what you're most excited about the assets you already hold in Hamak, and give us all the lowdown. What's ahead?
Yeah, I'll come in, Kevin. Thanks. So just to recap, we did a pod a few weeks back, actually, looking at the two countries that we're present in Ghana and Liberia. I'll just put Liberia to one side. I'll come to that in a minute. But as far as Ghana is concerned, we have this option to acquire a very interesting project there. It's located south of Tarkwa, which is a Shanti gold field, surrounded by major producing mines. This asset has been sitting dormant for a while. I don't know why, but it's our good fortune that we were able to get hold of it now. It's got a small resource at the moment, 250,000 ounces, sitting in the upper oxides primarily, which is amenable to low cost, low stripping ratio, future mining potential. What we're going to do this year, we're just closing out the DD now, the final part of the DD, which to all intents is done. We'll be announcing something on that in the near future. But we're going to effectively do a drilling exercise, just reconfirm that resource, restate the resource statement, 250,000 ounces of gold plus. I don't expect it to be any lower than that. And then running parallel with that, we're going to be running a sort of economic scoping study, really looking at what this 250,000 ounces minimum can represent in terms of a future mining opportunity. And by this, I mean sort of mentioned low cost, low stripping ratio, heap leach operation is really sort of what we may be looking at here. So during the conferences in Cape Town. Just recently attended, Kevin, as you know, met a few independent consulting groups that we're going to pick one basically to effectively do an independent economic scoping study, financial model, and basically, by late summer, this will tell us really what value is sitting in that project and how we're going to tackle it going forward from a potential future mining operation. I believe, at this gold price, even at a low gold price, it's a project that can turn really good cash flow for a period of 5 to 7 years, and really that's what we want to be keeping our options open on, I think, going forward. As far as Liberia is concerned, let
me take you back, Carl, to the Ghana project. What grams per ton are we talking about for the 250 ounces?
This is going to be, you've got the oxides and the sulfides. Most of this resource is sitting in the oxides. The historical, if I can call it that, resource statement that was done to JORC standards, this is in 2016, right? Put a grade of 1.7 grams a ton on it, right? I think it's going to be a bit lower than that, to be honest with you, probably sitting around about 1 gram a ton, just because we're going to do things in a little bit more of a, I won't say conservative way, but I think the way we would model this would probably look at a little bit more dilution, which I think is a sensible approach to it. But nevertheless, even at that grade, if that's what it pans out to, at even a gold price of 3,500, which was previously modeled, turns cash flow, a lot of cash flow and a pretty healthy NPV for a project of such scale. So, these are the sort of targets, if you like, that we're looking at the moment to basically refine, restate, and, basically bring up to date, independently signed off, that, the market can sort of believe in.
This, Carl, is open pit or underground?
Yeah. So this is, like I said, most of this 250,000 ounces is in the oxides. So basically from surface down to about 30, 40, 50 meters max. Probably. The drilling historically has gone to 80 meters. It's still in mineralization, but the resource is kind of being done previously to about 50 meters depth. So it's sitting in like pods, if you like, kilometer long, 150 meters wide. Things that we've done some pit shell modeling on this, even at this early stage. I like to do these things, and it shows a stripping ratio of less than 1, actually 0.75, I think was the stripping ratio. So it's just amenable to something that you can strip and heap leach, very, I won't say quickly, but very, very cost effectively compared to going deeper with a higher stripping ratio and obviously going at greater depths, even underground. So,
Carl, just explain to the uneducated what a stripping ratio is.
Well, it's really how much ore are you mining relative to your waste? Okay, so if you're mining, let's say, if you take 1 million tons, and your stripping ratio is going to be 0.7. I've got to get this the right way around. You're mining 1 million tons of ore for 700,000 tons of waste. I think that's the right way around to say that.
Yeah. Okay. So, and if it was a stripping ratio of 1, for every ton of ore, you're going to get 1 ton of waste, if you like. That isn't actually.
That's it. And it's unusual, I think, to have open pits, especially more mature ones anyway, that have a stripping ratio, as favorable as this. You're often looking at multiples of waste to ore.
Yeah. So just to cover this, I presume because it's Ghana, your all-in sustaining costs are going to be pretty low in terms of the fact that it's an open pit. You've only got a small stripping ratio, etc. So profitability-wise, that should be pretty impressive, no?
Yeah, that's right. We haven't done those sums yet. This will come out of the economic studies that we're doing. However, the report I talked about before, 2016, had a ASIC of all-in sustaining costs of less than 1,000. In fact, that was updated more to last year's costs, or less than 1,000. They redid their financial model, and which I've seen, of course. Now, I'm not saying that's what it's going to be, right, Kevin? There's inflation in the world, and things cost a lot more than what they did 2 or 3 years ago. But they ran this model at initially 1,650, and then later 3.5, and here we are sitting at 5. So even though the costs have gone up, the inflation has gone up, so has the gold price.
Yeah, even if the all-in sustaining cost for $2,000 and we've got 5,100 gold, doesn't really make a lot of difference, does it? It's your margin.
That's right. Yeah, I think there's a healthy margin here, whichever way we slice and dice it.
Yeah, very good.
I'm going to jump in there, Carl, and just add in the fact that projects which have a relatively low capex and a relatively high throughput and a relatively fast track to production are quite rare. So this is a fantastic opportunity for Hamak, because there's been basically a 15-year period where there's been very limited exploration in the gold sector, and the margins on most projects have been pretty narrow because you had huge inflation in the mining sector after the 2008 crisis. Gold price did run quite well, but actually the margins were squeezed for quite some years, so companies weren't doing much exploration at all. So there's a real vacuum for good quality projects, and it's great that Hamak has access to this one.
Yeah. I should point out as well, just finally, in terms of the acquisition cost of this, I mentioned this right up front. It's equating to about $10 per ounce to acquire this particular project with what it has on the ground. And obviously, I think there's a lot more upside to the resource than what's essentially in the resource statement as it stands at the moment. You've got the depth extension through the sulfides, of course, but also the geochem anomaly extends way beyond the signed off resource at the moment. I'm not saying we're going to tackle that right now, but it's definitely future upside to resource.
Very good. So go on and tell us a little bit about what's happening in Liberia then.
So Liberia, our initial project was this high-grade discovery in Nimba County, northern Liberia, which is literally spitting distance from the 5 million ounce ET gold mine held by Endeavour in Cote d'Ivoire, neighbouring Cote d'Ivoire. It's right on the border. So we had a joint venture partner that funded this through the course of last year. They're refocusing on Australia now, and we're bringing in a new partner that's going to basically take this project forward through further drilling, geochem sampling, geophysics, with a view to putting a resource, a maiden resource on the table, which I can't give a time frame on that because it's going to be run by the joint venture partners, but they're quite aggressive company, and they want to bring in two drill rigs, as I've mentioned, and basically do a lot of drilling and a lot of work, which is great for us. So we'll essentially have a free carry on this project going forward. Just to remind everyone, if they don't know, our initial discovery hole was 20 meters at 7 grams a ton near surface, and we've had few sections sort of along strike from that, albeit at lower grades, but nevertheless, the geochem footprint over 5 kilometers by 1 kilometer shows that this may have size attached to it. So but it is more early stage than Akoko in Ghana, for example. It doesn't have a resource, and obviously that's what the objective of the work from the joint venture partner coming in will be about. So in terms of that JV, I'm discussing. We're at the final binding term sheet stage now, and we'll be announcing the sort of details of that hopefully in the near future. And then secondly, in Liberia, we're looking at projects all the time, and like Steve, I've worked in Liberia for 20 years. I know it's a good place to be. It's been sort of unexplored and underloved for quite some years. Nevertheless, those that do take the effort and time to do it can find multi-million ounce deposits, like the one Steve mentioned, held by Avocero, like Dugbe, held by Pasifino, which was Hummingbird in previous times. So, there's a lot of potential in Liberia. So we're looking at bringing in a second portfolio project from Liberia in the near future, just finishing off the negotiations and term sheet on that. And again, we'll be announcing something on that in the near future. So I'm pretty excited about this one. It's got a lot of historical drilling on it with high grades, a lot of artisanal digging work going on there. And these are the sort of things you can come across in Liberia, right? So, I wouldn't say projects like this would be readily available in sort of more sort of traditional countries like Uganda's or Mali's or Burkina's or countries that have had a good tonka tit over the exploration years. But Liberia is kind of behind the curve in terms of awareness, let's say, and we're kind of first or second mover in this case because it's already been drilled, but second mover advantage.
What is the political situation like in Liberia?
It's been stable for many, many years now. I was there in early 2000s when it was, still civil war was running around, right? But since those 20, 25 years of progress, we've had 5 or 6 sort of free and fair democratic elections, and the country's stable. It's got a relatively decent mining code. There's low tax. You get full repatriation of profits. It kind of runs on an American sort of economic model. In the broadest sense of the terms, it's kind of free market, in which, there's no sort of shouting of nationalization of assets and resources and, we're going to tax the hell out of you all. No, it's never been that sort of mindset in Liberia because it is effectively very closely related to the US and how things are run in the US, economically speaking and politically speaking.
And you're obviously going to be creating quite a lot of jobs on the ground if Nimba comes to fruition in the way that you hope. Then it's going to be a big deal for Liberia as well, I would imagine.
Yeah, I mean, social issues like that are paramount. You've got to do the right thing by, obviously, the people, the communities, and the government in that respect. And definitely we subscribe to that.
Very good. So a question to you, Steve, then, as you are the Treasury advisor for the gold, what is the overall plan? Are we just talking about gold, or are we going to be going for other assets?
Actually, I'm going to defer back to Carl on that. That's probably above my pay grade to determine. I can give some opinions on gold and what's going on in the gold market. And obviously, it's got captured everyone's, I don't know if an imagination, but everyone's looking at it now. Whereas for quite a few years, Carl and all of us have been banging the drum about whether it's the undervalue of gold or the overvalue of currencies, one of the two, maybe both, that actually something had to break and something had to move and there would be a reallocation towards gold. That is unfolding in front of our eyes and started about 18 months ago. And new highs have been set in the gold market. I think sort of 5,600 was the recent high. We're about 5,150 today, maybe. People are calling, even the major investment banks who previously wouldn't even look at gold when it was trading at 2,000, now calling 6,500 as the high by the end of the year. You have to take it all with a pinch of salt. There's some big players in the gold market. It's not necessarily 100% transparent with what's going on. People can be short gold with huge amounts of leverage. If they want to move the price, they can do the reverse. It depends whether you're taking the physical, and there's some mirroring going on in the silver market right now, which is interesting to watch. So it's someone famously said that they tend not to try and make predictions, especially about the future. So it's difficult to say what will be happening in the market, but I think everyone now is realizing that gold is a safe haven asset, and then in a geopolitically or financially uncertain world, it's probably a good place to allocate to. And I think the best place that you can get gold is, as Carl is doing, is by buying at $10 an ounce in the ground and selling it for $5,000 an ounce in the market.
Well, maybe we don't sell it. Maybe we give it to Tim. Tim, bringing on to you in terms of the treasury then within Hamak strategies. Tell us what is the strategy, first of all?
Sure. So obviously working very closely with Mike, particularly on the Bitcoin side, which is my kind of predominant focus. So first of all, it's being opportunistic and adding to our stack, which we talk about with the board on a constant basis in terms of adding more Bitcoin as and when we can, reducing the average price that we have, and increasing the Bitcoin per share for shareholders to give them value. A lot of people have a metric which they call MNAV, which if you look at MicroStrategy, it's one of the big things that they look at, which is basically their enterprise value relative to their Bitcoin. And on that metric, Hamak looks very, very well positioned. Obviously, it ignores all the value of the other assets in there, but just looking at it on a pure kind of one-to-one basis, it's very well positioned at a nice premium. And then other ways that we can acquire Bitcoin and generate yield. So we can sell puts. And so what that means is obviously if the price is we're at just over 68,200 at the moment, we might say, okay, let's sell a put 20% lower down than this, which means two things. We take in some premium, so we generate some income, but it means that if the market drops 20%, we get to buy it at that price. And so again, if we were buying it today, we'd be paying 68,200, but if the market drops, then we get to buy it at a cheaper price. So again, adding to the stack, generating the yield, and reducing the average cost. So that's one of the strategies. Another one that we've talked about is potentially selling calls on the upside. So when we get into a sort of more of a sideways movement in the market, range bound, that type of strategy works very well. But again, you have to be realistic that if the market does have a spike up, you might sell some. Now, the other part is, you don't do this with your whole stack. You don't do it with everything, because that puts you at a huge amount of risk. And I'll go on to it in a moment. I won't name names, but there's some companies that are using quite a lot of their stack to do that, and I think that's incredibly risky. The other thing that you're seeing out there, and it's something that again we've talked about, and again it's discussion with Mike and the board, is having some of that BTC against a credit line of some sort. Now, there's two things you can do with that. One, if your MNAV drops below 1, you could use that capital to buy back cheap shares and raise the MNAV up. Or secondly, you could use it to leverage and buy some more Bitcoin. But people have to remember leverage works both ways. I sat at an interest rate derivative desk in 1997, 98 and watched long-term capital blow up. I watched III blow up. So leverage works both ways. You have to be very, very careful. It's very nice to do that. And I noticed there was an announcement yesterday from another Bitcoin treasury company that seemed to get quite a large loan or credit line. And that made me slightly nervous personally if I was a shareholder of theirs, because leverage can work both ways quite badly. So I think that, the discussion with Mike and the board has been, about being prudent. We're looking after everyone's BTC and shareholder value, and it's being smart and prudent with that. There's a number of other strategies out there that people are doing. There's another one that people are doing where people say, "Oh, give us your Bitcoin, and we'll look after it. We'll give you a loan of not very much, like a very low interest rate." And what they do is they title transfer your Bitcoin, and they go and trade it in the market for you. So you've got huge counterparty risk if they blow up. And again, there's people doing this left, right, and center. And again, I don't think people understand what they're doing. And so I think, the discussion that we've all had is, it's about being prudent, it's about being sensible, it's about being measured. It's not about betting all on red or black. It's about at the margin being able to increase that Bitcoin per share. And so that's something that's paramount, and we don't want to lose money for people. That's the important part.
If we get to a point where Ghana is producing massive amounts of free cash flow, then do you see that? I suppose this is a question for Mike as well as Tim. Do you see that there's a position then that lending or borrowing non-equity based finance at that point against that income stream would make a lot of sense?
I'll defer to Mike on that one.
Tim passes the ball.
I mean, look, there's lots of things we're looking at, as Tim and Steve and Carl have said, not only in the gold and Bitcoin, but other sort of ways of looking opportunistic, but obviously conservative as well. Looking at other companies that have these Bitcoin treasury companies, what they are, they're not like us where we've got gold and Bitcoin. There are some companies out there, smaller companies that just have the Bitcoin, looking at their MNAVs, looking at where they are now, where, a couple of these are trading well below their MNAV, a huge discount. So we look at all opportunities, not with what we've got at the moment.
Okay. That wasn't the question, but you answered it anyway. No, the question was, if you've got free cash flow from the gold in, let's say, a year's time plus, it's an open pit. At the end of the day, this is not going to be a hard asset to get into production. I mean, we're not talking 5 years here. We're talking 12 months, maybe 18 at the tops, if all goes well. If that happens and you are throwing off cash, is it something that you would consider that you would borrow against that cash flow to then upgrade the treasuries in either gold or Bitcoin?
In terms of what do you mean by upgrade the treasuries?
Well, increase them.
Yeah, I mean, obviously, but we could just use the cash flow that we're getting to increase the treasury and do some of the strategies that Tim's talked about. Like I said, but what I sort of answered before and alluded to was that we look at lots of types of M&A opportunities as well, and getting Bitcoin cheaper through that method.
Yeah, I suppose the question on my lips and the question on most of the boards is, you have created this board of people, which is exceptional, really, in this marketplace, and you've got a market capitalization of £5 million. How are we going to leverage that so that this does become a £100 million company plus, which is what I'm sure all of these people have joined for, not the current situation?
It's like any company, isn't it? I mean, people have got to sit up and take notice at some point. As Carl said, he will be hopefully making some announcements in the near future about certain things that we've talked about on this call, which I would think would lead people to say, this is a good company, and it's about time they sort of bought it, because 5 million value at the moment doesn't reflect where we're going and what we're doing.
So Tim, Steve, first time on the roast. We always ask guests this: what is the perfect Sunday roast in your households? Starting with you, Tim.
So I'm not going to go in my household. Okay, I'm going to go in our local pub, and they've got something. And this is controversial. I'm not sure whether I'm jumping over boundaries here. It's not a nut roast. I'm going to go for the Sunday sharer, which they have. Now, the Sunday sharer, it's got the rump of beef, it's got the half roast chicken, British roast chicken, and it also has a Dorset lamb strip loin. And with that, you get the lovely Yorkshire puds, you get the thyme roasted potatoes, you get the Savoy cabbage and leeks, get some roasted root vegetables plus gravy. I think that's going to be hard to beat, personally.
I think, Tim, that's just greedy, and you've got a treasury to look after.
Well, that's why it's called a Sunday sharer, but it's not just for me. It's to share out amongst everybody.
Love it.
Very good.
Steve?
Well, I'm with Tim now.
You're sharing the plate, yeah.
Just
You
been
can,
blown
you can
out the
come up to
water.
Barnes.
Yeah, forget it. I'm coming across there. That sounds great. Fantastic. Yeah, done.
Okay. On that note, we'll say Carl, Mike, Steve, Tim, thanks very much for appearing on the podcast.
Thanks, guys. Cheers.
Thanks,
Thanks
Kevin and
very
Phil.
much.
Good
Lovely to meet you
cheers.
both.
Let's move on to our second guest this week. We're joined by Charlie Long, CEO of Critical Mineral Resources. Welcome back, Charlie. How's life?
Good, very good. Nice to be here.
Yeah, absolutely. So Critical Mineral Resources has secured a 10-year renewable mining license over 14.6 square kilometers at Agadir Malul in Morocco, covering the planned initial open pit across Zone 1 North and Zone 1 2. This is a major de-risking milestone, moving the project firmly toward development, with a maiden resource targeted for late Q2 to early Q3 this year. In a tightening global supply environment for critical minerals, getting a mining license in place is a big step, and it positions CMRS to accelerate drilling, resource definition, and ultimately production in a supportive jurisdiction. So now that you've secured the 10-year mining license, what are the immediate operational priorities? Drilling, resource definition, or early stage development work?
Well, both. So the drilling is ongoing, and all being well, we'll carry on drilling for years and years and years. So the maiden resource is just a sort of dot in that timeline. But we will have only drilled maybe 1.5 or 2% of the project by then. And as we buy more ground, it will probably stay at 1% because the overall footprint is getting bigger and bigger. So the drilling is just an ongoing thing. In terms of getting the plant ready to be, or the mine ready for construction, I spent a couple of hours this morning on a call with one of our Moroccan consultants who's going to start the process with so we've done metallurgy work, but we're going to do more metallurgy work. He's got a pilot plant, so we'll do some more lab scale work, then we'll do the pilot plant work and get that flow sheet, nicely and accurately designed. We've kind of talking already about how big the initial plant's going to be, whether we'll probably have 2 crushers and start relatively small scale, but then sort of build it up. And he's also going to manage the EIA for the processing plant, which is obviously a key thing. And that's going to be quite a relatively quick process. There's good support from government to get processing plants permitted as well, because they mean employment. So that whole thing, I think we're very much on track to having everything fully permitted, having our resource, having our feasibility study with, fantastic support from skilled people in Morocco by the end of the year, and being able to make a decision on pushing a button for construction in, right at the back end of Q4. But yeah, it's great to be in a country where there's all that skill and that support from government to get things done.
Yeah. And as I said at the opening there, getting this 10-year license is a big step. But how much does this license materially de-risk the project in terms of financing discussions or potential strategic partnerships?
Well, it's obviously fundamental. You can't get anything financed without your mining license. So it's a massive milestone. I guess it's just in Morocco, it's normal course of business. So, I've been in and invested in other countries where getting a mining license is just a massive hassle and can be delayed for a long time. And there might be certain people that are acting against it because they want, they have their own agenda. But we just don't have any of those issues in Morocco. And so I think it's just a signal of how good it is to operate there when you've got the right team, and how we're expecting a smooth journey going forward from here. So it's a massive thing, but it's a bit sort of whatever as far as Nurdine's concerned and our JV partners. For them, it's just like it's standard. But I think for the mining industry, it's actually very, very significant.
It's hugely significant. And then obviously that license granted for Zone 1 North and also Zone 2, license period of 10 years, and thereafter the mining license area beyond. But you're also looking at an MRE estimate for late Q2, early Q3. Can you talk a little bit about that and what you're hoping to achieve?
So we're drilling Zone 1 North, Zone 2 South, Zone 2 Central, which is where we found the rhyolites. We'll probably go down to sort of parts of Zone 1 as well, like Zone 1 Central and further south from where we're drilling now. And that's kind of going to be the main the sort of area of the initial mine. That the size of that resource will just depend on what we discover and the thickness and the average grade and which bits are good enough grade to be in the resource, which will fall out, which bits are, low grade or barren and don't get used. So we don't really know. I mean, we've got our internal numbers and our internal targets for what we want, but I think it's going to be absolutely plenty for, at least 10 years of our initial mining tonnage or, throughput and annual tonnage. But B, it's going to be, as I said, once we've increased our footprint a bit more, probably around 1% of the property, maybe 2. So, or of the the overall project. So yeah, I'm not going to give you a tonnage target because I've seen
You don't want to give yourself the rope, do you?
but we know that it's going to be sufficient to push the button on mining, and we also know that it's just going to be a tiny part of the overall project.
Yeah, and then obviously drilling's ongoing at the moment, right?
Yeah.
And in terms of obviously you'll kind of get kind of an initial idea potentially from XRF. But in terms of assays coming back, when do we reckon we could expect those?
Assays. So to be clear, we don't have an XRF gun at the moment.
Okay, fair.
I think we're investing. It's just we've been running on a shoestring, and certainly new ones are quite pricey.
But,
so we expect probably the thing is that the lab is quite busy. So they say like 10 days, and then it's like 3 weeks.
Yeah, I know how it goes.
But we're drilling now. They'll start to cut core, and I mean they're already cutting core, but sending shipments to the lab over the next sort of week, and then they'll start sending every week. So by the end of the March, I think we'll have a decent drilling results announcement. We also hope to have a bit of an update on the gold because we've obviously announced some gold assays, and we expect to find some more gold. There's going to be a bit of a process where we try and understand what that means, whether there's a decent sized gold deposit or whether it's just a small area which will give us some gold credits, whether we process that gold ore separately or whether we just mix it in and just have gold credits in the concentrate. But there's sort of gold news flow, there's that drilling news flow towards the end of next month, and also the just general project development news flows as I touched on earlier.
Yeah, I mean the thing is the holes are looking sort of 20 to 50 meters in length, but in depth even. But obviously you're probably looking at the occasional deeper hole to drill test where the basement might be. Just briefly, you're hunting for rhyolite, right? Yeah. And then also the mineralization, as you say, is near surface. But it seems to be the mix seems to be quite unusual almost in terms of how it is on the surface and the mineralization that you have. Would you say that's a fair comment?
So what's unusual? The mix of rocks or the
combination of the mix of rocks and also the fact that it's so close to the surface.
I think being close to the surface is unusual. Tizza, which is 50 kilometers away, has got the same rocks as us, but it is at surface in places, but it dips and goes deep underground. So we're lucky that we're kind of undulating and it's all quite shallow. We think maybe the deepest areas might be 50 or 60 meters. So that is unusual, and it means that a small company like us with relatively lower access to capital can actually develop this thing and mine it without making too many mistakes. I think going deep underground, it's a lot of capex. It's much more complicated mining underground, and there's plenty of opportunity to fail. So it's a massive thing for us. The mix of rocks is what it is. I mean, I can't really comment on whether that's unusual. I guess if we find a lot of rhyolite, it will be unusual because it will be 2 projects in one. And if we find decent gold, then that will be 3 projects in one. But I don't want to
presuppose.
I'm quite a conservative, cynical guy. So for me, it's like they're just a little bit of bonus in terms of tonnage and grade and maybe gold credits. But obviously there is potential that we find a decent amount of gold and a decent amount of rhyolite, hence, the odd deeper hole. But we do want to target those deeper holes. So we'd want to do a bit of geophysics so that we are not just sort of randomly drilling, looking for stuff that, So we're going to be doing geophysics this year too.
Yeah, I mean, last question from me, but I mean, I think the name of the game, right? If you can get free in one, as you described it, and it's all, most of it is near surface, then the OpEx, but also the margin on a production there becomes a lot more attractive than it would otherwise be. And I guess that's the blue sky potential, isn't it, for the stock?
Yeah, for sure. But I think just being shallow makes a massive difference. And I think I might have said before, so many mining companies out there, and this isn't a criticism, it's just such a tough business. They make good EBITDA, but all that EBITDA gets eaten up in CapEx.
Yeah.
Growth CapEx. Whereas if you're shallow, that operating cash flow or EBITDA should be quite well converted to just having free cash on the balance sheet. So being shallow is a massive thing. And then if you've got three ore bodies in one, then obviously that's just an additional bonus.
Yeah, indeed.
Well, Charlie, congratulations on the license, first and foremost.
Thank you very much,
This
Kevin.
basically now means you have a business, I think is the best way to put it. And before you had an ore body and now you have a business. So from a cash flow point of view, as you've talked about trading, and you've also talked about open pitting this thing. If I was to ask you 18 months from now, how do you envisage critical minerals looking?
Oh, that's an interesting question. 18 months. I think we'll probably be in construction at that point. But touching on trading, we were talking about that maybe before the record button was pressed. But we are looking at other ways of making money, because without sounding conceited or just ridiculous, I think we're business people and not geos that are just trying to develop a project without any real business acumen. And certainly Nurdine's a fantastic businessman way before he's a geo. And my background was in, roofing, slate, and trading and building materials when I was younger. So we have a couple of other ways of looking at of generating cash. One is trading, and I won't go into too many details. And the other is another processing plant somewhere else in the country. So I would hope in 18 months' time that would be, close to production at Agadir Malul, but generating cash from another couple of businesses from elsewhere in Morocco. But obviously we're at the BD stage, and you need financing, but these are, on the trading, we've been developing that for like over 2 years. And on the other processing, we've got very good support from government and from other stakeholders in the country to help us make that happen. And with Gero coming on board, who's got good access to capital, I think we can make all of these things happen. And I think we're going to be a great business.
Good. Sounds fantastic. I mean, from a share price point of view, after raising the money, it's been pretty reasonable. You've hit 3p a few times, but still, in terms of what Charles was saying as well, the market cap is pretty low in terms of what is ahead. I mean, how big in tons have we got in this mining license, even in the 1 or 2%?
Well, how many tons of resources have we got?
Yeah,
I'm afraid I can't say. I mean, if it was.
Hold him down quick. Let's get the number out of him. Let's get the number.
He can tell you, but he'd have to kill you. That's the difference.
We don't know yet. We don't know.
We don't know. That's a good answer, Charlie.
Charlie, here's what you do. If you get like a helium balloon for next time, just suck it up. Then when you say the number, it'll sound silly.
Yeah.
So
is it more or less? Is it more or less than 50,000 tons of contained copper?
Oh, that's an interesting question. So it could be. It could easily be that, we're just drilling the sort of cliff and where it's exposed. And if you go along strike to the east, or along the sort of undulating layer to the east, if that's mineralized even like 10%, we could easily be at 50,000, 5 million tons at sort of 1%. But we just don't know. And the whole ploy here, that's the right word, is to build a big enough portfolio, which we know the copper is there, so that, even if we're really unlucky and only 5% of our portfolio is mineralized, we still get to hundreds of thousands of tons of contained copper. But if we're lucky and we get 20% mineralized, then we could easily have a lot more. And in that one permit, 50,000 tons of contained, or even more than that. But we don't know. Sorry.
Yeah, no, I understand it. The don't know bit, but it really is between being a very good asset And it could be a tier one asset if you have 20% mineralization across this period or this
portfolio,
acreage, if you like, because it is massive, even though we're only talking about 1 or 2% at the minute.
Yeah.
But I'm intrigued, and I like what you're saying in terms of trading and getting other sources of income. As Charles said, I think before the interview, we've been talking to Ethereum, and they're doing something very similar. And even the other mining companies that we're talking to, like Xtract, they're going into small scale mining so that they cover their costs and more. So they can go for a bigger game, and that's what you're doing. And it seems to be the small cap miner. This is the right way to go in the current situation.
And I think it was used to be the way it was done, and it certainly is still the way it's done in the private world. Before, I guess, the industry was hijacked by bankers, and as long as you're not overpaying for your processing plant, and the numbers work, there's no reason you can't have relatively small industrial scale plants, as opposed to a project finance, with a syndicate of banks with a 500 million or $1 billion, capex, upfront capex number, which really only benefits the banks, because you spend the next sort of 5 years high grading the mine to try and pay back your debt, and the only people that make any money are the bankers and the lenders, and the shareholders get screwed. So yeah, it's just, I think it's normal, back to normal mining business is how I would describe it.
Good. No, I like it. I think we look forward to seeing what's ahead for critical minerals, and let's see where we get to.
Okay. On that note, we'll say Charlie Long, CEO of Critical Mineral Resources. Thanks very much for appearing on the podcast.
Thank you.
So let's move on to our next guest. We're joined by Martin Churchhouse, geologist from Xtract Resources, to talk antimony and what is quickly becoming a serious Moroccan strategy. Back in July, Xtract completed a 90-day reconnaissance program across Wildstone's 24 licenses, covering around 380 square kilometers inside Morocco's antimony triangle. That work confirmed widespread mineralization, historic production, active small-scale mining, and established geophysical signatures that can now be rolled out across the wider portfolio. Now, we've seen the acquisition of the former producing Amgas mine, a site last worked on in the 1950s, with multiple high-grade antimony sulfide veins historically exceeding 40% antimony. Previous mining focused on hand-sorted ultra-high-grade material, leaving clear potential for a broader mineable resource. Environmental work is underway to reinstate the mining license, underground sampling has begun, and the objective is straightforward: define a mineral resource and potentially move toward antimony concentrate production into a tightening critical metals market. So the question is, are we now looking at the foundations of a scalable antimony business in Morocco? Let's get into it. So welcome, Martin. How's life?
Very good, thanks, Phil.
Yeah,
a nice introduction there.
Absolutely. So, I mean, as I said, this is not a greenfield punt. This was a producing antimony mine in the 1950s. So how much does that de-risk the project from day one?
Significantly. I mean, of all our 20-odd licenses that we've got, and the majority of them have actually got historic workings on them. So, we know what's there. We've had an opportunity to get underground in all of these old workings and things. So, as you say, I mean, that de-risk matters. We've done a huge amount of work at Amgas, and also neighbouring Hood, which is also what was a former large producing underground mine. It's been very interesting. A lot of waste material and things we had to sort of start moving around at surface in order to start exposing all the underground workings. We've been back into all these workings. We've cleaned them all out. We've made them safe. And the team has now been going back and doing sampling. So what's particularly exciting for us, and which sort of gives us the confidence to sort of look at scalability and starting to determine how big a plant we want to put up on site, is that, as you mentioned, historically, everything has been mined with visual hand sorting of mineralization. So typically it would be anything that was massive stibnite, which probably had a grade of anywhere from 10-15% up to 40%. Anything that was sort of in the sort of 1 to 5% range was invariably just left behind and missed. And what we've discovered is, in the wall rock alteration, either side of these high grade veins, we're finding quite substantial amounts of antimony mineralization at really good grades. And because the antimony has got a very high, density, specific gravity of whatever it is, 6.5 or something, it suggests that there's a very good chance that we can probably go back to our old friend dry ore sorting and actually put all of this bulk material through a dry ore sorter and produce a nice pre-concentrate that we can then put into flotation. We have finished the first round of bulk test work. We're waiting for the results to come back on that. Once we get those, we'll tell the market how that looks. We will get that sample off to our friends at Steiner to have them do some dry ore sorting test work for us. We're finding there's a lot of mineralization still in situ at AMGUS. Almost certain that at some point we'll be able to go open pit. I think the vein density is such that, and also the orientation of the veins means that we can almost quarry down to the valley floor level, and we can actually have a face that's pretty much cut parallel to the vein. So it makes it pretty easy and relatively low cost to develop. Ehud is next door. It's probably 6 months behind us at this stage. I think we are in a position now where we can probably start looking at an initial mineral resource estimate. We'll beef that up by doing some drilling just to see what's happening with those veins at depth. And then once obviously we get the assays and things back for the underground sampling, we'll see how that pans out. But we're reaching a point now where internally we're starting to discuss trying to scope a float plant, because that's obviously the next step for us to take is to get a float plant on site and start producing. I think we mentioned to you before that there's still quite a lot of artisanal activity going on in the region, and we're very keen through our local partners who have an excellent relationship with artisanal miners, and they've been purchasing from artisans for a number of years, to try and build out that relationship and maybe even start looking at putting in spirals or something out in the regions where we can have people deliver their product and we can upgrade it and pay them a fair price and then transport that material through to a centralized float plant. That's being given serious consideration at the moment. And I think we'll have success there. Obviously, if you're an artisanal miner, and a metal trader comes along and wants to buy the product off you, the problem you've got is because you're living, out in the sticks and things, you don't necessarily have a bank account, you don't necessarily have a computer and all those things. So it's impossible for a lot of companies to undertake the required, know your client in order to be able to buy product off them, which means that they're limited to buying from a number of suppliers that can actually drive the price down for these local guys. So there's an opportunity there, I think, for us to offer a sensible price and get that material as well. So yeah, look, it's good. At the same time, obviously, we're not ignoring the other 20-odd exploration licenses. We've got teams out working on those, and that's looking very interesting as well. So overall, I'd say we are rapidly moving to a position where we're going to be able to determine a resource, certainly initially at Kas and then at Ehud. And, we want to, once we get the MET results back and we can start putting a flow sheet together, then we want to very quickly start looking at putting up a plant. Done all the necessary work, submitting feasibility study documentation and impact assessments in order to have the licenses reactivated. So all we would now need to do is to just submit for a processing permit, which obviously we need our flow sheet and our sort of throughput capacity and things for a plant, and then we're off and running. Great response from Morocco. Our Moroccan partners have excelled themselves. They've done a fantastic job, and we couldn't be happier with the way that's working.
Good. Okay. And when you see these historic grades of over 40% SB, just how rare is that globally in antimony terms?
I don't think it's that rare, in as much as a lot of places where you've got antimony as the primary resource, you tend to have massive veins, and massive in the sense of a lot of mineralization packed into that small area, rather than not implying they're huge. And I think so you will get high grades. I think what distinguishes this a little bit is this breccia either side of it, which just makes the package that much more substantial.
Yeah, because structurally, you've mapped those vein systems, which I think extend several kilometers from memory. So could AmGas be part of something much larger than that historic footprint?
Yes, we can stand on, we can stand in the entrance to a gallery of a nice big vein at AmGas, and we can follow it across our license to another hill 2 kilometers away, and you can see ancient workings. So yeah, chances are it's there. And of course, the other thing, don't forget, is that because all the mining that was being done historically was rudimentary, mining was only done down to a water table level. So everything below water table remains in situ and has never been tested. And there are tens and tens of kilometers of that type of material that can still be accessed. So there's a heck of a lot more there for us to find still, that's for sure.
So Martin, this is very encouraging in terms of the whole project. Now, we know the story behind antimony is really a Chinese story, that basically China have got the whole market pretty much, because you're looking at Chinese prices at $20,000 to $25,000 a ton, and yet European US prices can get to double that. So I mean, are we in a situation? And I mean, if you compare those prices, then you're talking about 3 times the copper price, really, basically. So if it was in comparison to a copper asset, I mean, what do you think the potential tonnage is in terms of the projects that you know of, not the exploration, what we know of?
Well, look, I think just taking a step back from there, just to cover off the point you made previously. I mean, again, it's a classic case because of the Chinese influence. Again, it's that classic situation where they are restricting exports from China.
Yeah,
obviously has an impact on the price. And going forward, anything that is going to come out of China is, I think, going to be strongly controlled in terms of how much supply they're prepared to release. So, it's a classic case again of, it's a strategic metal. It's got also, it's a lot of really important functions to fill, and you're really looking. It's back to that chestnut of looking for independent, reliable supply chains. And in order to do that, buyers are now starting to diversify their sourcing, which means that they're going to be looking at people like us in countries like Morocco, with a stable government, a responsible mining ministry with legislation that we all understand and can work with. And I think that's what's going to happen. They're going to be looking at projects like that. Again, there's no reason why we can't produce a final 65% antimony concentrate, and it gets trucked into Europe. It just goes on the ferry across to. I mean, it's that simple. So I think it's important to note that there's clear evidence now. We're seeing it already, receiving inquiries and things, asking, people asking us how far advanced and things we are, because people are now looking to, as I said, diversify their supply chains. In terms of tonnage, it's a difficult question to answer, Kevin, in as much as if we were looking at just the high-grade veins themselves at Ras, I'd say there was at least, and only in the one hill, and only down to sort of valley floor level, which is a very small fraction of what we've got, then you're probably looking at somewhere under 500,000 tons. But that's 500,000 tons at least 3-4%, I would say, potentially. And then if you start adding in the wall rock alteration and things, then, it could be significantly bigger. So yeah, look, it's. I mean, whatever figure I give you is to some degree going to be misleading because we just don't know at this stage.
Yeah. No, I accept you don't know. I'm just
what I can say, Kevin, is that there's enough there to warrant building a float plant now.
Yeah. And in 2026, do you anticipate that you will be at the point where you have a concentrate at the end of the year?
It's always possible. If not, it'll be early 27. We're new in Morocco. We've all our permits and approvals have come through in double time. Hopefully, same thing will happen with the processing permit. We've obviously got to get our act together and decide on the flow sheet and decide how much capital we want to spend on a float plant. Then we need to do all the necessary work to get the approvals to to build it and to put a tailings dam and everything else in place. But we're not looking. I think the key here, and it's the reason I'm being a bit sort of evasive on when we'll be in production, because the key thing here is we're not talking about float plants of 1 million tons, 750,000 tons a year. And by virtue of the grade of the product that we're producing, we're looking at a plant that only needs to be doing somewhere between 5,000 and 10,000 tons of run-of-mine feed a month.
Yeah, which is not very big.
You're
but
talking,
at the same time, financially, that will make a massive difference to Xtract.
Sure, you're looking at a plant that you can stick it in half a dozen containers. It's just a case of finding one.
That's very interesting, and I mean, it's a metal that's massively in demand. So yeah, I can't see how this isn't going to be a success for you guys at Xtract. But the other one that actually is going to be in production, way before that is Silver King. Do you want to bring us just a bit up to date on that one, and then we'll call it a day?
Sure. Yeah. No, Silver King is moving ahead, and we've got full-time engineers and geologists, grade control guys on site now. The plant is obviously ready to be loaded, and first blast has been done on the waste, just to push back a little bit. Our guys have just been helping the contractor decide where he wants to do the next blast in order to sort of start producing the first run-of-mine material to go into the plant. So what I don't know at this stage, I'm not sure what the delivery time is on the consumables for the reagents for the plant, but we will have ore available as run-of-mine feed in the very near future.
Very good. Exciting times ahead, I think, for Xtract Resources. When you look at the assets that they've got, you've got what we've already discussed, plus you've got Bush Ranger now, which got to be economically coming into the equation with 1.3 million tons of contained copper. And then you've got those exciting, I remember sitting with you in Namibia, and we were talking about those licenses in northwest Zambia. The Xtract have got, Galileo have got, African Pioneer have got. So, I mean, there is so much blue sky upside. It's really quite hard to get your head around it all.
No, true, and it's it's a nice diversified portfolio as well. So nice to have. Obviously there's a predominance of projects in Zambia, but it's good to have something elsewhere in the region.
So that's looking all pretty good with Xtract, Martin, but I see that certainly share price performance and assets, we've got quite a move on Kendrick. Do you want to bring us up to date on what's happening in the field?
Yeah, of course. Thanks, Kevin. I think since the last time that we discussed it in the public, we've now submitted all of our permits and applications and things to get the drill rigs on site. We've commissioned a drilling contractor. We've assembled a team who are heading to site this weekend. I'll meet them on site, and we're good to go. We've got a plan. We'll start looking at. We'll go back to all the existing drill core from Kisahoe. I think we've figured out that there's probably more mineralization there than was initially recognized. So we'll resample and relog all of those holes and get that done. Also, there's 3 or 4 kilometers of trenching that was excavated but never sampled. So there's a huge amount of useful information we can pick out there. And then initially, obviously, we'll get the rig onto Tiffelskupper or TK, and we've got 8 distinct phases of mineralization there, 8 sheets, and we'll drill each of those 8 and figure out what's going on structurally. And then once we've got that information, we'll probably do another quick mag survey, which will give us a much clearer idea of what's going on subsurface. And then we can do infill drilling, which will rapidly escalate to resource estimation. And we've also got a DEM survey, which has been commissioned. So we'll actually do a volumetric estimate of all the mineralization that's sitting above surface, which historically was estimated to be somewhere in the region of 4 million tons. So we'll get that done properly, so we know exactly how much is there, and we can put an estimate together for that. And then the final thing they'll do in the short term is we want to start sampling the breccias sitting between these high grade sheets, which we know are mineralized, and we can see some very high grade veinlets and things running through that material. So we want to start doing some trenching and bulk sampling of those. And subject to what we find in terms of grade, we'll start sending that material off to our friends at Steiner to do some dry ore sorting test work to see if we can upgrade a product from that bulk material. So yeah, it's very exciting. It's all moving quickly, which is good. We've managed to get a couple of Namibian geologists that have got extensive rare earth experience working with us as well. They'll be joining us on site next week. So yeah, we're effectively up and running.
So now the option agreement's been signed, and obviously it's now sort of 70-30 as long as you get a pre-feasibility study done and 50-50 otherwise. What other information has been able to be released? I mean, are you more aware now of the grades and all that sort of stuff that's there, or was that available already?
It was the high level numbers were available previously. What we're proposing to do, and we're busy working on, is sort of updating the Kendrick website, and we'll put more information out there. There are also a couple of technical papers that have been written, which we'll be doing a sort of a synopsis of those. But no, look, I think it's pretty clear from having had now an opportunity to look in more detail at the extensive database that Teufelskuppe or TK, you do have some extraordinarily high grades there, and they're usually found in all the sort of, with the fluorocarbonates and things in these big sheets and these intrusions, and that there's absolutely no reason, subject to drilling, which we will do, that doesn't continue at depth. What we need to do now is just, we know that there's, based on the wide space ground mag that was done, we can see that the sort of subvertical mineralization that sits above surface sort of bends and goes under, bends and sort of almost goes subparallel to surface, which actually works in our favor, of course, because that means we're going to end up with a whole load of very high grade sheets all stacked up on top of each other, which will be nice for open pit extraction. So it's a simple case now of getting the drill rig and confirming we've got continuity of mineralization and continuity of grade at depth. And then, as I said, seeing if that intermediate material sitting between the high grade zones, carries sufficient mineralization to warrant us trying to, put it through a dry ore sorter. If it does, then that's going to push the tons up significantly. And then at Kisahoe is lower grade, but my sort of view on that is we shouldn't be fooled by that. I mean, we say it's lower grade, but we're still talking 1.5% total rare earths, which, if you compare that to what else is going on in the world, still puts you in the Premier Division somewhere. But more importantly, with Kisahoe is, and I've been talking to some of the local rare earth experts that have been working on it for a while, is structurally very complicated, but in a positive way. You've got multiple phases of intrusion, all of which are mineralized, all cross-cutting, forming this really quite complex sort of jigsaw of dikes and intrusions. So it's slightly harder to evaluate, in as much as you could try doing ground geophysics, but there's so much mineralization so closely packed together that you just wouldn't be able to effectively separate all of those different mineralized bodies. So the only way really to do it is with the trenching and with drilling. So once we've got that first round of drilling in at TK and we're waiting for results, we'll move across to Kisahoe and start drilling there. Kisahoe potentially has potential to have a serious tonnage, and I couldn't even give you a number off the top of my head. I wouldn't know where it would be. We've got to do that work first, but there's a lot more mineralization there than we first anticipated when we
so these two licenses then are separate, then are they not the same thing, or are they in the same license?
No, two separate licenses.
Okay.
About 15 odd Ks apart.
Okay, so the question that is in my head is, how did these rare earths get here? The rare earths are effectively open at surface. I take it from what you're explaining, it's almost like a cliff edge that you see the rare earths in, and then it goes below the surface then in those same sheets.
It's not huge. Well, I mean, it's in terms of emplacement and things, you're talking about something that's in many respects very similar to a kimberlite. It's come from, I think it's the upper mantle, and it's just been intruded. And instead of just being intruded necessarily as a plug, what's happened is you've got a whole different phases and pulses of intrusion, which have formed these sheets or cones. And if you take a TK, you've got a reasonable amount of material that is sitting above surface, and that's just partly a function of the orientation of those packages of high-grade mineralization, so that it forms, once you get all that erosion and things taking place, particularly as you've got all that sort of fractured material that's sitting between those zones, which has got lots of biotite schists and other things in there, that tends to get eroded away and leaves you with these prominent features at TK, where they're subvertical. Where they go horizontal, where we think the bulk of the mineralization is going to be, obviously you don't see them because they're sitting under as little as 20, 30 centimeters of cover. If you go across to Kisahoe is the mineralization of those intrusions are sitting in all sorts of directions. I mean, it's very difficult to determine what's the preferential sort of direction there, obviously. But as a result of that actually forms a negative erosion surface. So it's the exact opposite of TK. So you just see a little bit of outcrop at surface, but nothing spectacular. But when you start scratching around and you start mapping things, you realize how much is there. I mean, it's an awful lot of mineralization.
Very good.
Very good. Yeah, Martin, it's always a geology lesson when you come on. I always like to hear your insights.
My apologies.
Some of it goes obviously over my head, but a lot of it is very interesting. So we'll just say Martin Churchhouse, geologist, Xtract Resources and Managing Director of Kendrick Resources. Thanks very much for appearing on the podcast.
My pleasure. Thanks. Nice to see you guys again.
Okay, so let's have a look at some of the movers and shakers of the week. I make it IQE PLC up some 85%. They issued shares following the exercise of employees' options under the long-term incentive plan with shares ranking. Not really sure. There's obviously some sort of ongoing strategic review and includes standard regulatory advisory and disclosure statements under that RNS. There's not a massive amount, it's a bit vague, but that has been a good mover this week. Anglesey Mining up 60% after completing its £4 million debt restructuring, removing all material liabilities from its balance sheet and leaving only £100,000 of secured against a residential property at Paris Mountain. The company is now fully focused on advancing its 100% owned Paris Mountain copper, zinc, lead gold project, with priorities including aerial geophysics and ground follow-up exploration, shaft dewatering, updating its JORC compliant resource model and progressing a pumped storage initiative with re-energize. So great news from Anglesey Mining there. Altona Rare Earths, REE is the ticker. They're up some 38% on news of the US TDA grant agreement for the Monte Mwamba Rare Earths project signed. So they formally executed a grant agreement with the US government through the US Trade and Development Agency. Good news on that one as well. That one's up, as I say, about 38% on the week. Kendrick up some 30%. And obviously we just spoke to Martin briefly about things going there. You know, what do you make of Kendrick? Obviously it's been an incredible performer over the last, I don't know, let's say 2 months, from the very lows around the 0.15, 0.2, trading around 2.6%, but it's been explosive. And do you think there's more to come yet with Kendrick?
Yeah, I think it's gone from 0.25. I think really it was never 0.15 in the last while anyway, for any volume anyway. I think 0.25 to 2.5 plus, 10 bag. If we are to believe Martin and the geologists, then I don't see why it won't do 10 times more again, at least. And don't forget, it's got the vanadium project also in Scandinavia as well. So it's not just this asset. The other asset does have a value as well.
And I believe Blue Fox as well, from memory.
Yeah, where's that now? That's in Zambia.
Zambia, yeah, Blue Fox, Zambia.
So it's not just this asset, but the reality was it was massively oversold because nobody loved it and there wasn't anything happening with it. So all we've done really is now we've got a good asset, and now it's worth what? It's worth about £8 million.
8 million, yeah, 7.8 million.
If we go down this line of Europe and the US requiring these rare earths to get away from China, then we're going to have a bit of a GMET situation where tungsten and the SML as well, tungsten West, where these assets are going to be overvalued, if you like, because of their rarity. And I see that's what's going to happen with Kendrick, to be honest with you. I can't really see any other way that it's going to happen. I don't think it's going to cost them a lot of money to get to where they need to go. And the project, someone was doing the project numbers in the group, and like it was trillions, not billions. And so it's actually mental, the potential size of the thing. But I can't see a small company like Kendrick taking it all the way. So I think the most likely scenario is that they'll take it to pre-feasibility study, and then someone with big pockets will probably take it out.
Yeah. Okay, and then we saw Aterian. Good news for them this week. They secured environmental impact assessment approval for the 100% owned Agda's copper silver mining license in Morocco, which marks a major regulatory milestone and materially de-risks the project ahead of a systematic drilling and development. The approval from the Regional Centre of Investment of Erechidia enables advancement of the 50.4 square kilometre anti-Atlas project, where previous shallow drilling returned highlights including 1.24% copper and 101 grams per tonne of silver over 3 metres at Makar North. So good news there. And obviously we're supported by the AI-driven geological modelling via Lithosquare as well. Great news for them. I think it kind of definitely does de-risk the project there with the EIA in approval.
Yeah, I mean, it's great news. Look at those grades. They're phenomenal. Like, they really are not off the charts, but they're extremely good. And I mean, I know it's only for a short period of time or a short distance, but even so, I mean, Aterian is one of those ones. If they get the trading house done, you're buying all of this for less than £4 million, I think, at the minute. You know, when we compare it to, I mean, again, we were talking before we came on about GMET, right? Yeah. GMET, £400 million because of the tungsten. I think the value's there. I don't think it's overvalued, to be honest, because I think things like the Department of War, you've got Truth Social, who basically have bought the fusion tungsten deal in the US. They're desperate for it, and they're going to have to pay through the nose for it. But you look at something like Aterian at 4 million, which is 1% of the value of GMET, and you know, you got to ask where your risk reward is. I mean, congratulations 100%. To me and to everybody else who was in GMET. Don't get me wrong, but the reality of the situation is, where is the value? And I'm looking at it going, I still think GMET's going to do 2 or 3 times from here. I really do. So I'm not putting it down in any way, shape, or form. But I think things like Aterian, we talked about First Class Metals as well with their Sunbeam project. I feel like that's a gift, because basically the market's taken it that somebody sold a whole load of shares at 1p. They've had to sell them at 1p because that's the deal that's been done for a large block. But that's not the true value of the company. That is crazy.
I think you're right. I think it's about finding the ones that I'm not saying that they're definitely the next GMET, but certainly even like a quarter of the value that GMET has reached. You know, to get something up to from a 4 million to a 10 or 100 million or even an 80 million company. You know, you've got a 20x on your returns there, and companies like Aterian with their assets could actually deliver 80 million. I wouldn't be surprised. You know, I'm not saying they're going to do it in 6 months. But, you know, certainly in the next 3 to 5 years, they could see value.
Yeah, I don't think it'll take that long, to be honest with you. I mean, I'm looking at those basement ones that we talk about, and you're talking about Aterian, you're talking about Kendrick, you're talking about First Class Minerals, slightly higher valuations. Same valuation. You're talking about African Pioneer. Then you got slightly higher valuations with Xtract, which has started to move, and obviously we just talked about the antimony, or antimony, however you pronounce it. Xtract. Then you've got Bazant, who are about to go into production basically anytime soon, the same as Xtract. And any number, I mean, one of the ones now that's 50-60 million is BRES, Blanco Resources, you know, with the graphite. And the scenario is now, why is that valued so highly? Because the Americans want the graphite.
No, it's not even high. I mean, it's 33% up on the week is Blanco, and it's still only a market cap of £65 million. So it's nothing really, is it, when you consider what they've got?
Yeah, when you consider it against a GMET stroke other assets that are in the US. I mean, let's even ignore GMET and just look at comparable stocks in the US in terms of resource, or even in Canada or Australia. our stocks are just dirt cheap.
Do you think we need to look at some stocks then that have got the investor backing of the likes of, Pure Bond, UCAM, etc., and make comparisons and say that they will definitely, they seem to be obviously spotting the right shares. Do you think that that'll work?
Yeah. And Appian as well. I mean, maybe you got to look at AJAX Resources as well. It's the same deal, isn't it? Yeah. Market capitalization of around £8 million, and they've got one of the big boys on board for one of their assets, in Appian. So you got Appian, you got UCAM. I mean, these guys aren't stupid. They don't always succeed, but they definitely succeed a lot more than they don't. And then you've also got the bigger ones, haven't you? You've got GreenX, who's got the potential with the court situation going on there with Poland, and a massive copper gold project probably in Germany. And then you've got Sovereign Metals, which I think is fundamentally undervalued for what it has. When you compare that now to other resource plays, it is undervalued without doubt.
Indeed.
So just coming on to quantum in general, because obviously there aren't that many stocks that have got quantum in the name, but we've got Quantum Data Energy, which was formerly MAST. Again, a gift, I think, at 2p. Market cap 4.5 million. We interviewed Peter during the week. The warrants that have plagued it basically can't come into play until probably 5 or 6p minimum. The market cap now is just not relevant to what the assets are and what they've actually got. I mean, they own 100% of Piebridge, which must be valued at in excess of £10 million, and the market cap's 4.5 million. And okay, they've got 2 million debt on it, but that's going to be paid off. They paid £1 million off last year. The rest of it's going to be refinanced and then paid off. And then they've got 2 more duplicates, which they won't own 100% of, but they will own part of it. And then they've got another portfolio of 40 megawatts. And then they're working with the data centers. Well, the news this week about Trump and the data centers saying they're going to have their own electricity sources. Well, this is exactly what they're doing. Yeah. And we've got the same situation with Active Energy in Dubai and Saudi Arabia. Those 2 stocks, in my view, are going to absolutely have a monster run in the next year or two, because it's needed, it's required, and there's not that many people doing it. Yeah. And while we're on the topic of quantum, let's give Delta Gold Technology a bit of a cheer. I think we're nearly up 200% since it was tipped in December. It just keeps going. Blue sky. It could be worth anything, literally, because the Penn State University now and Toronto working together sounds like there's lots of exciting things going on, and they're not going to be the last universities that are added, I'm pretty sure.
Yeah, does look promising, doesn't it? I think the share price momentum on Delta has been phenomenal, and it just looks so strong. I think this is one of the things on Aquis. Once you get a clean IPO on Aquis, it's just incredible to watch.
It is, and that's something that you've got to think about when you're investing, guys, is if you look and you can get a clean shell on Aquis with good shareholders, you're going to get the value that you deserve. Yeah, and that's exactly what has happened with Delta Gold. Yeah, and I see AJAX doing the same thing as well. Also Aquis, but once it gets moving, it's gonna do extremely well.
Yeah. Okay, I think we talked long enough. 3 guests there. Any sport you want to mention? How Liverpool getting on? You had a 96-minute goal, I believe. There's 3 points.
Yeah, come on, you Reds. 96 minutes against Nottingham Forest. Yeah, Liverpool, Anfield, West Ham, Man City against Leeds,
United
United against Palace, Arsenal, Chelsea.
Oh, that's a big one. That
will the choke continue? Is the question. Mind you, they didn't choke against.
No, they got the 8 points now, haven't they? So they've done. Yeah,
they blasted them, didn't they? So they've got a game in hand, and they are how many points ahead? 5 points ahead with a game in hand. Yeah. So I mean, it will only be 2 points once the games are done if City win those points. But it looks like Aston Villa's pulling back, basically. So I think it's going to be a race between Villa, United, Chelsea, Liverpool for those probably three spots. We got a pretty nice run coming up. If we can get some wins going on, then I think we should do quite well. But who knows? And Chelsea are all over the place. Chelsea seem to be either win, lose sort of thing. United are playing much better. Even the football is much better. So, yeah, there we go. It should be an exciting end to the season, I think.
Okay, very good. If you like what you've heard, please do subscribe, hit the bell icon for further notifications of future episodes, and thanks very much for listening. Have a great weekend all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net